The Federal Open Market Committee concluded 2 days of talks Wednesday, saying it will continue to buy $85 billion of Treasury bonds and mortgage-backed securities every month. Although the downside risks to the economy have diminished, Fed Chairman Ben Bernanke says unemployment is still too high.
Job gains, along with the strengthening housing market, have in turn contributed to increases in consumer confidence and supported household spending. However, at 7.6%, the unemployment rate remains elevated, as do rates of underemployment and long-term unemployment.
The Federal Reserve projects unemployment will fall to 6.5% by the end of 2014. That's about 6 months earlier than previous forecasts. It's an important marker because 6.5% is a threshold the Fed has set to wind down accommodative policies that have kept interest rates at record lows. Despite assurances, financial markets tumbled. On Wall Street, the Dow Jones Index fell more than 200 points after the announcement. Glenn Hubbard at the Columbia University School of Business says that's because investors believe the Fed is likely to phase out its bond buying program sooner.
The question of timing of exit and the politics of exit are very real. Investors are quite right to be worried. And of course, there's uncertainty about the identity of the next Fed chairman. All of that indicates a bumpy road.
The new uncertainty is over who will succeed Bernanke as the nation's top banker, after President Barack Obama said during an interview that the Fed chief has probably stayed on longer than he wanted to. Asked about his future plans, Bernanke was coy.
We just spent 2 days working on monetary policy issues, and I would like to keep the debate, discussion, questions here on policy. I don't have anything for you on my personal plans.
Bernanke's second four-year term ends in January next year. Among the likely candidates is Federal Reserve Vice Chairman Janet Yellen. Arcega, VOA News, Washington.